Good afternoon. Today it's the 14th of December 2023. I just finished making a video on housing in Turkey and prices of houses in November. And there are slight increases, slight decreases depending on the city. And so it can be seen. And so this is my third video today in the English channel. So I skip every 2-3 days and make a video now and then. I have close to 10,000 subscribers in my English channel. Most of them are probably from my Turkish channel, but they are getting good use of it. I'm not just mentioning Turkish market, Turkish prices. I'm also economist. I'm also giving prices of the expectations of the other countries, US dollar, equities, commodities, all of them, with a different look, let's say, because I do not copy the other economists who are the system economists. Okay, I'm a sort of a anarchic economist. Okay, so I just continuously criticize the what's been pushed to people and try to show them the reality of what's behind the scenes. So that's why it's a different look. Uh, so for the purpose of this video, as you all know, last night, today is the 14th, so it's a Thursday. On Wednesday night, the Fed, after receiving the CPI and PPI day after at the same time, uh, they uh, they just convened and made their monthly meeting. So everybody by now knows the results of the meeting. They just made a dot plot, and in the dot plot is like all members put some dots on a piece of paper and say when do they expect a rate decrease or increase. So this time there was no increase. All of them were either not moving, or for 2024 they just put dots, and this is done every quarter, end of quarter meeting. So the next one will be coming at the end of March. Okay, so this you won't see anything in January and February. Next meeting of Fed and the announcement will be in 1st of February. So you have 51 days or 50 days, including today, of time for the market to settle down and get used to these figures, the dots that the Fed members placed. So markets just hearing that they are thinking of cutting the rates. Some members, like most of them, put three cuts for three rate cuts. Three rate cut means every rate cut is 25 basis points. So it's like 0.25%, 1/4 of a percent. Okay, so three basis cuts. Some said four, but then the next year in 2025, additional 4, 5, 6. So basically, what they are thinking of doing in the coming 3 years, they want to reduce the interest rates down to 2.5%, something like that. But it's too early to talk about it because they don't even know what they will do next meeting. So forget about looking into summer months, this and that. They did not announce any rate cut exactly at this point, and it wasn't expected anyway. They could have increased it by a quarter point. So as they didn't increase, they also were very dovish and first time, because it's silly, because 12 days ago, not 15, Powell gave a speech in somewhere and he acted like an eagle, or hawkish or eaglish, and just 12 days later. So how can you wait another 3 months and think these guys are going to be behaving like they did 10 days ago? So, but this is called a pivot. Pivot means a return from what you've been saying before. So before they were saying, let's increase the interest rates. Now they're saying when we should cut the interest rates. So that's called a pivot. Okay. So, but there are arguments, again, based on how you look at it, because the system economists, as they claim, they say Fed was very successful in bringing down the inflation, so they didn't need to go with further interest hikes. Okay, but on the other hand, what others like I do, because the interest payments of the United States went up to $1 trillion and surpassed even the American social security payments and defense payments and all of them in the budget, annual budget. So this was heading towards very dangerous spot. It's already at a very dangerous spot. So they had to, and then we know that commercial building loans are at a danger. We know many banks are crumbling because Fed just set up a system for them to save them from collapsing. So these are not automatically happened. They had to find other, let's say, funds which are funded by you Americans and the Turkish as well, because all the world is funding USA, okay? Because US dollar is a reserve currency. When American says, I know I lived in US long time, says, I'm a taxpayer, and how come you spending the taxpayers' money like this? We are all taxpayers of United States, okay? Because as long as it's accepted worldwide, so there is about, excluding the children, probably a couple of billion people who are paying for the interest and expenses of the US, okay? So this is something that US would never want to lose, the reserve status of their money. Then only the people in the United States will pay for the taxes and interest rates. But now it's all world that's paying that because it's a reserve currency. And that's the big battle between China and USA today, whether which one would be the people reserve currency to be selected for the future, or prohibiting the Chinese yuan and any other currency, or if they make a common currency like being mentioned, prevent this and keep dollar as the reserve currency. So that's a main target. It's more important than the wars around for petroleum, oil, everything. Reserve status of US dollar is the most important strategic thing for United States. So this is what you should keep in mind. All the wars and show forces and show off navy, and it's all done for keeping the reserve status of the US dollar, because there is no more bigger money than that. Because assume I'm writing checks, and because my name is on the checks, all my checks are accepted. So do I need to do any business? I'll just write checks, and that's it. So this is the same situation for US dollar. Just create from thin air, paper or non-paper, digital, whatsoever, anything that's called a US dollar, and just sell it to people, sell your inflation, sell your taxes, everything. So why did I get into this? Because of this interest rate, not just affected high interest rates, the United States, it affected all the world countries. So they had to beat the US dollar interest rate. They can't, because there are small developing countries. How can they match the 5-6%? Because if they surpass the 5%, the investor will still buy the US dollar, because it's a reserve country where you can print the money. If they can't pay it, they'll just print it. So, but the small country has to give 8%, 9%, like Turkey, go up to 11, 12%, almost double the rate of, and then they have a chance of going bankrupt. So far, they haven't. But we know many countries have been, let's say, bankruptcy for a country is different than for a bankruptcy of a person. Countries never go bankrupt. Their people go bankrupt, okay? So they just keep printing, like Venezuela, in countries like in Africa, in Lebanon. So they keep printing, and their life, of course, goes terrible for the people living there. And we are now seeing the huge results in Argentina, trying to stop the problem. And of course, it's not an easy problem to stop. It will take some time, because now they increase the value from 350 something pesos to 800 pesos. It's still below the black market rate of the peso. It has to be about 1,100 pesos for a dollar. So then he has to take the steps. But okay, momentarily, when you hike the price of devaluate your money or lower your money, increase the value of the US dollar, it's a temporary solution because now things will be much more expensive to import for the people in that country, which will slow down their spending. Okay, like interest increasing 30%, assume that. But it's not a long term. People, they just get adapted and country gets printing more and more money. So in 1 year, 3 months later, it's all gone. You know, the usefulness of that devaluation is no good. So at the same time, just like Javier Milei is doing right now, they have to close down most of the government facilities. That's not going to be easy. He may be very what I suggest him that he keeps his relations with the military and police force very close and secure, because he will be contested heavily by the rich people who get use of the inflation. Inflation is a very useful tool. They'll make you very rich if you know how to invest in inflation, which is borrowing in local money, okay, which evaporates automatically, and you buy houses, land, whatever. Just get loan in local money. Never get a loan in US dollars, okay? So that's a system where you make huge amounts of money, where rich get more richer and richer because they hold assets and equities, and the poor don't. But when you have a devaluation, normally the poor don't lose anything because they don't have anything, any savings, so they just start from scratch. Okay, in a month or two, their salary will go up. They will lose in lifestyle, but not in assets. Whereas a rich person may suddenly lose in a 50% devaluation, like Argentina, if he was not careful, if he was keeping his money, just in Argentinian money, or doing business, receiving money, term money, because term money is all vanished now. Half of it is gone. If he sold on term, like pay it in 60 days, 90 days, it's half gone. Okay. He had to get it directly the same day he sold the goods. Okay. So that he can protect the money, put it in US dollars, whatever, gold, anything. So basically, now people living in Argentina for many, many years, same in Turkey, the rich people already know how to protect themselves. But the new or rich, the people just became rich, they don't know this. So they deposit their money in the country's currency, and country's currency give very high interest rates, like 100%, 150%, and they calculate that's a huge amount of money, that they can spend for a lifetime. But suddenly one night, Javier Milei comes and cuts half of the income by doing a devaluation. So it's all gone. So that's why in countries with, let's say, living for a very, very long time with high inflation, smart people never change their habits of keeping foreign currency, gold, or real estate. Okay, so this is, Americans have not witnessed this high, at least recently, but last 3-4 years, the American dollar also lost its value about 15-20%. So you are feeling the effects, but this is nothing like a high inflation. And so what can you go to? You cannot deposit. You are already on US dollars. You are already on euros in Europe. So what can you invest in? Gold, real estate, okay? But get loans. That's how you make big money, okay? Getting mortgage loans at the right time. But the interest rates, now they will start coming down, interest rates. But my view is this: American inflation has not stopped at all. Currently, the core inflation is still twice what Fed was projecting, 2%. It's 4%. So it's 100% above. If you look at it in another way, 2 and 4 may sound small numbers, but it's 100% above their target rate. And we know the real 3% CPI comes from the value of US fighting for the petroleum with Russia and Saudi Arabia, and he's the biggest producer of oil. they finished up their strategic reserves to sell it to Europe so they can fight the Russia making more money. So this is temporary. Now that the inflation is not temporary. The low oil prices are temporary. And now with the US dollar losing value today, let me check you. It was 104 to the dollar. Right now, the DXY American index fell to 101.65. That's a huge drop, okay, against euro. And this is just against euro. Euro is another terrible money anyway, but that's the comparison. 57% of the basket is euro against the US dollar. The rest is Japanese yen, British pound, some Swiss francs, but they are not really comparing anything valuable against anything valuable. They are both trash, okay, to me, trash. Trash is compared against trash. Still, it's losing value because the other trash in Europe may be giving high interest. So they are acting in compliance with each other. Just as yesterday, US Fed announced that they are stopping the increase in the interest rate. Today, the European central banks, Madame Lagarde, also announced that they are not increasing the interest rate because then it would be big competition. US dollar will be coming down to 90, 80, 88 and, dropping like a person falling from a helicopter, without a parachute. So they are acting in compliance. But one thing is not acting with them. That's gold, silver, commodities. Now, because the value of commodities like oil, gold, silver, aluminum, nickel, whatever you call, anything that's touchable, their values are right now all crippled because people first rush to equities in stock exchanges. That's why you noticed last night the S&P stock exchange made a record high, its own record high, not against the all-time record high, because it was double its price against gold in 1999 before the dot-com bubble, okay? So it's just a recent high in US dollars, so it's not against gold, okay? It was twice as much as this in the past because US dollar lost so much value. Today, a record is not a record, okay? It's a music record, okay? So we will see what else we will see in the coming months. This is just a summing up everything. We will not see US inflation dropping down. On the opposite, we'll see it hiking. And we'll see if Fed was really sincere to act, because why will US interest inflation hike? Because everything is valued in US dollars. So for an American, not for a Turkish person, you are buying oil. Now oil will become, instead of $68, it will become $80. There goes your $10, okay, per barrel. You're buying with barrels, okay? Then anything imported into the US, even the money imported to the US, they will become more and more expensive. Energy, everything, because they're all valued in US dollars, and US dollars are falling, okay? So the value of the items are going up. An item like a gold, let me explain it on gold, is not dumb. If I weigh this gold for 1 kilo or 1 pound for an American, 1 pound is $2,000. Now, if I shrink the dollar to, value from 104 to 101, then I will not sell the same pound of gold for the same price. I will ask for 2,200, okay? If it goes further down, I will ask 2,500. Same goes true for all commodities, okay, including house construction goods, imported goods, marble, anything you can think of, okay? Spare parts, raw materials, everything will increase in price in the US. So this will result in further inflation because importation prices increase, basically. So you may not feel these effects very quickly, but in a very short time, you will feel them because it's now the election time is getting closer. Only 11 months left until US elections, not the Turkish elections. They are in the end of March. So in the US elections, this is what they need. They need expansion. They don't care if the inflation goes up to 6%, because then Fed can come out and say, well, sorry, you guys, we thought things were getting good, but, we thought it was temporary, but it wasn't temporary. So we may increase the rates again. So let's see what happens after the election. Okay. They hope that it doesn't come back before elections. Then there's a big problem. No chance for a politician to be elected when there is a suppression of the interest rates to avoid inflation. Politicians rather have inflation than recession. Recession is very bad for politicians, because then people are losing their jobs, the businesses are closing down. He doesn't want to go to elections at that environment. But if the prices of things are going up, that's the other side of that's more preferable for a politician. Inflation is more preferable against recession to any politician. Okay, so think of this worldwide application. So what we will do as a small investors, we will keep our money as this inflation will go on further and further in strong assets. You can choose among assets, because like equities may act fast, but then once they hike enough, like let's say 10, 15, 20%, then you may go to commodities. Okay, so last night all of them went up. It's not going to go like that. Okay, so some equities will go up, some will come down. They will balance out, because there is only so much money. So much money can decide to go to developing countries' stock exchanges, or stay in the US stock exchanges, or buy gold or buy silver. You cannot do three investments with the same money at the same time. Okay, so you have to choose or make a basket of goods. Just select some of them and keep them in gold. And if you're looking for high trends, you can try the stock exchange, like Nasdaq technicals whatsoever. Or like in Turkey, there is very high interest payment for US dollar euro bonds, which I think will be taxed very soon. More before they were only taxed 10%. So they gave the right to the president to increase it up to 40%, but he will not do it very recently, to avoid people running to US dollar investments with a guaranteed interest payment of 8%. So they will increase the interest rates for them in foreign currency denomination. Okay, so but there is still nothing out yet. It's just they just gave the right to the president to apply as he likes. So we will have to check the weather and dress accordingly. If it's rainy, if it's hot, okay, then we get the towel and the swimming suit. Okay, so keep in touch. I will keep making videos based on the developments in the market. Right now, we will be watching the markets develop. Let me check for you the latest at this point of time. Okay, gold is future gold is up $61 to $2,059. So it's not the record. It's, to me, its record was 2070. Although one night it went up to 2,130, to me it's not the record. In a week or so, it will surpass the value, I assume. It will surpass the value that it sent a spike on that day. So gold is up 3%. Silver is up 6.5%. Silver is $24.41. So Brent petroleum is up 3.20%. American petroleum is 3.38%. Copper is up 3.08%. Platinum is up 4.10%. So basically, cotton is up 0.32%. As you see, this is the inflation coming to USA. All commodity prices are increasing because US dollar is losing value. it's 101.59. So Dow Jones is increasing, equities are increasing, S&P 500 is increasing half a point. Even Turkish Stock Exchange, right now it's closing in 15 minutes. It's up 3.5 points because, as I said, US dollar interest rates coming down made it easier for other countries to reduce their interest rates for foreign currency. Okay, so the ongoing rate for TL is only US dollar against US dollars 28.97, only slightly down because Turkish government wants to devalue the TL faster by daily methods. But if you look at the other values like euro and British pound and other currencies like British pound gained 1% against US dollar. So how come TL didn't gain 1% against US dollar? So this tells you easily this cross rates tell you that there is a game being played on some currencies because Turkish public looks at the value of the US dollar, not the euro. Euro is very close to 32 TL. It's 31.90. Okay, and mostly bank shares are up today in Turkey. Reason being, foreigners will first come and buy the bank shares. Okay, so they are buying front buying before the foreigners come and buy. I also warned my followers 2-3 days ago. I won't buy Turkish equities at this time. But if you feel a unstoppable hunch to buy Turkish let's say stocks, I would choose banks, okay, if I have to, or buy the mutual funds of the banks, okay. And okay, it's up 3.5% today, but then we have tomorrow, day after. It doesn't finish all in 1 week. Yeah, it's going to be continuing. So we'll see how long the breath will take it up. Okay, how much breath do they have in them? We'll see. Okay, but gold and silver, they have not even started their going up. I just calculated today. If you sell your gold today in Turkish lira, put it in a bank and get 48%, 47, 50% interest rate, gold will go from 1900 something, 80, 70 to 3000 TL. So this is secure, guaranteed by a bank. So that means if you want to stay in gold, you must accept that you are expecting better than 3000 TL per gram. Otherwise, don't waste time. It's like selling your assets, putting in the US government bonds at 5%. Now they are giving 3, less than 4%. Now people are very probably thinking, oh, I wish I had put my money at 5%. Well, maybe you won't. In 2-3 months, you may see 7-8% inflation again. Then you can thank God I didn't put my money in 3%, okay, or 5%. So we'll see the inflation results of the commodities, how they would suppress it or they won't be able to suppress it. We will see. At least we have 51 days of free flowing money. They will only talk and convince people that they may increase the interest rates very strongly if inflation goes up. So that's the only tool they have now, because they declared for 51 days they have no objective of increasing the rates in the United States. So I hope this was helpful, especially the section on commodities, price actions of commodities on U.S. inflation. Will be more helpful for my foreign subscribers, let's say. I hope you all a nice time. If the housing rates come down from 8, 7.5, 7, 6.5, because the U.S. government bond rates are falling, don't miss out on that. If they keep coming down, take it. If they don't, you can always apply for a refurbishment of your credit, not the house, okay? Mortgage credit. See you all later. Bye-bye.